Hello friends, how are you? I hope all of you are doing really good. So let's continue with our series of cost accounting standards, and now we are going to continue with cost accounting standard 3, that is cost accounting standard on production and operation overheads, right? So whenever we hear this word overheads, the first thing that comes to our mind, that should come to our mind, is that what are overheads? The overhead means all the indirect expenses, incurred in the production process. Now, what are indirect expenses? All those expenses which cannot be identified in one unit of the finished product, right? So all those are indirect expenses, and if an expenses we are able to identify in one unit of the finished product, all those are known as direct expenses, isn't it? So that means in this cost accounting standard, what we are dealing with is all the indirect expenses which are related to the production. Okay, so before we start with this, before we go into the details of this cost accounting standard, if you are new to the channel or if you have not yet subscribed to the channel, guys, please do subscribe to the channel. That is really important because you will get all the notifications, because we will keep on uploading such stuff. We have full course lectures already available and we keep on uploading these things. Okay, so it will be really useful for you, and do share with all your friends. Let your friends also take the benefit of these free lectures. Okay, so introduction says the standard deals with the principles and the methods of classification, measurement and assignment of production or operation overheads. That how you have to present, how you have to classify the production or the operation overheads in the cost sheet for the determination of the cost of goods produced or the services provided, and for the presentation and disclosure in this cost statement. That how you have to present it. You will be able to present it only if you will do the right classification, if you will do the right calculation of the production overheads, if you know how to calculate the value of a particular overhead, only then you will be able to present it in the right way. So the objective of this standard is to bring uniformity and consistency in the principles and methods of determining the production overheads. Uniformity and consistency, I can say the basic aim of cost accounting standards is to bring uniformity and consistency in the application of various principles, isn't it? Scope. The standard shall be applied to the cost statements which require the classification, measurement, assignment, presentation and disclosure of production or operation overheads, including those requiring the attestation, right? So it is applicable to all those cost statements where you are required to present the production or operation overheads, right? Then definitions. Production, or what is production or operation overhead? Indirect cost involved in the production of a product or in providing the services. So this indirect cost can be related to material also, right? This can be related to labor also, and the other indirect cost also. So all type of indirect cost that is involved in the production of a product or providing service. The terms production overhead, operation overhead, factory overhead, works overhead, manufacturing overheads denote the same meaning and are used interchangeably, right? So as we have already covered this chapter of cost sheet, there we call it as factory overheads also. There we call it as works overhead also. Works cost, we calculate the works cost. We call them as manufacturing overheads, operation. So basically these mean the same thing, that all the indirect costs which are related to the production of the goods, right? Production or operation overheads include the administration cost relating to the production, factory, works or manufacturing and providing of services. Now, in the chapter of cost sheet, we have studied something about administration cost, right? So when we talk about administration cost, this administration cost can be of two types. One is related to production and the other type of administration cost is journal administration cost, right? Now the one which is related to production, this will come under your factory cost, or we call it as factory overheads or production overheads. The one which is journal, we take it under selling and distribution overheads, office selling and distribution overheads, right? Basically not selling and distribution overheads, I will call it as office overheads, office and administration overheads, right? These are taken while calculating the cost of sales, right? These are taken while calculating cost of sales. So you have to be very careful while taking the administration cost in the cost sheet, whether it is given related to production or not. If it is not given, then you can give a note at the bottom of the solution, and you can simply say that because nothing is mentioned, we are considering it as related to production, or we are considering it as journal administration overheads, whichever the way you want to take it. Both ways it is correct. In addition, the production or operation overhead shall be classified on the basis of behavior, such as variable production overheads, or the semi-variable operation overheads, or the fixed. That is on the behavior. That is, their behavior will change with the number of units produced or not. If they are changing, it is a variable. If it is not changing, then it is fixed. If it is changing to some extent, then it is fixed. Then it is a semi-variable overhead, right? So variable production overheads, we all know, comprises of expenses which vary in proportion to the change of the volume of production or the activity or services provided. Semi-variable costs are the costs that contain both the fixed and the variable elements. They partly change with the change in the level of activity. Fixed overheads are indirect costs which do not vary at all with the change in the volumes. Now, the principles of measurement gives us that how we have to deal with the various items while calculating the factory overheads, right? If there is an abnormal cost, then how to deal with it. If there is a normal cost, then how to deal with it. So these principles tell us about the various items which are related to production overheads, which directly might not be production overheads, but they are related to production overheads. So how we have to deal with those items, okay? So he says the production or operation overheads representing the procurement of resources. That means here we are mainly talking about the indirect material. I'll not say raw material, I'll say indirect. So here you are talking about indirect material, right? Shall be determined at invoice or the agreed price, including the duties and taxes and other expenditure directly attributable thereto. What type of expenditure can be that? It can be insurance, transit insurance, it can be freight, right? Now, what kind of other can be? It can be transit insurance, it can be freight inward, right? If you are getting the material, procuring the material, directly attributable thereto, net of discounts. That means if you are getting a trade discount, he is given other than cash discount. That means which discount we are talking about? The trade discount here, not the cash discount. Sir, why not cash discount? Because cash discount is based on the payment, right? That if you make payment within these many days, we will give you discount. So this is an afterward discount. What we are talking here is net of discount, means the net of the trade discount. Clear? Taxes and duties refundable or to be credited. Now here he says invoice or agreed price including the duties and taxes, but you have to include only those duties and taxes for which the input tax credit is not there. Right? So if it is GST, you will get the credit of GST, that will not form a part of your cost. Okay? So be very careful that if you can avail the ITC, that is the input tax credit, on the material that you are receiving, then it will not form part of your cost. Clear? Any abnormal cost, it will be directly taken to costing profit and loss account, and it will not form part of your overheads, right? Because see, the cost which you will form the part of production or operation overheads, you will have to recover from your customer, right? All the cost which is to be recovered from the customer, you will include in this production overheads. But if there is any cost which is not to be recovered from your customer, then you cannot add that. Now, abnormal cost is not because of the mistake of customer. You cannot recover the abnormal cost from your customer. It will directly hit your profits. So it is directly to be taken to costing profit and loss account. Costing profit and loss account, right? Then production or operation overheads shall not include imputed cost. Imputed cost is nothing but your notional cost. That is the cost which has not actually been incurred, right? Depreciation, isn't it? But yes, sometimes it forms the part of that also. Normally we do not take it. Normally we have to take only the cost which has actually been incurred. In case of depreciation, there is only wear and tear of the asset. There is no actual cost that has been incurred, right? So production and operation overhead variances attributable to the normal reasons shall be treated as a part of production or operation overhead. So if there are variances in the production or operation overheads, right, if there are differences in that due to normal reasons, right, if it is due to normal reasons, whether it is adverse or whether it is favorable, variances we have studied standard costing chapter, isn't it? That if the actuals vary from the standards, so that is what he's trying to say. If it is due to the normal reasons, it will form the part of your production. But if it is due to abnormal reasons, then it will not form the part of your production overheads. It will directly be taken to costing profit and loss account. So always remember, this is the golden rule in cost accounting, the whole of cost accounting, that if there is abnormal cost, right, that cost is not to be recovered from your customer. It will always be taken to costing profit and loss account only. Any subsidy, grant or incentive that is being received, obviously it will reduce your cost, right, shall be reduced for the ascertainment of the cost object to which such amounts are related. If you are getting some subsidy from the government, if you are getting some grant from some agency or from the government, then it will reduce your production overheads. But why will you give the subsidy or the grant? Because your product that you are manufacturing is such that on which the government is providing the subsidies. For example, the electric vehicles, the government is giving the subsidies, right? So if you are manufacturing this electric vehicle and if you are getting a subsidy from the government, then this will be applicable. Your production overheads, your production cost will come down. If there are any fines, penalties or damages, now this is what? Sir, this is, if there is any fine, why will there be a fine or a penalty if you are doing something wrong? Now, if you are doing something wrong, it is your responsibility. Can you collect this fine, penalty or damages from your customer? No, sir, right? So this is your abnormal cost, right? This is your abnormal cost, and all the abnormal cost will go where? It will go to the costing profit and loss account, and it shall not form the part of production or operation overheads, right? So credits or the recoveries relating to production or the operation overheads shall be deducted from the total production or operation overheads, right? So if if there is any cost which can be recovered later on, for example, there is a question in this CMA module also where the crates are given, right? Let's say the bread goes in the crates to the various shops, and when that shop owner returns that crate, he is paid that money, right? So in that ways, or if the company who is manufacturing also, if they get any credits or if they are going to recover anything from the item which they are selling, that will reduce their production or operation overheads, okay? So where recovery exceeds the total production, the balance recovery shall be treated as other income if the recovery is more than the cost. Any change in the cost accounting principles applied for the measurement of the production shall be made only if it is required by the law or for compliance with the requirements of the cost accounting standard, or a change would result in the more appropriate preparation and presentation of the cost statement. That is very much logical, that if you have to make any changes in the cost accounting principles, then it should be for a logical reasoning. It is not that you are just sitting and you think that I'm free, let's change the cost accounting principles. No, it should not be like that, right? So it should be for a logical reasoning. If the law requires, then you have to change it. If it means that if you change the cost accounting principles, it will give a better view of your cost statements, then yes, you should change it, right? So it should be for a logical reasoning. So absorption shall be as follows. Variable production overhead should be absorbed on the basis of actual production and the fixed overheads on the normal capacity. What does it mean, sir? Sir, if your normal capacity, we have studied about the cost accounting standard on capacity utilization. If your normal capacity to produce the goods is 10,000 units, right? Whereas your actual production is 6,000 units. Now he says where the variable cost should be absorbed on the actual production, because variable cost is dependent upon the number of units that you have produced, right? Whereas the fixed cost should be absorbed on the basis of normal capacity, Because the fixed cost is not varying with the number of units. So whatever the total capacity is, based on that you have to take the fixed cost, right? So these then you have the disclosures, that what all disclosures you have to make in the statements. The basis of assignment of the production to the cost object, the production or operation overheads incurred in the foreign exchange. If there is any foreign transaction, if you have procured the material from outside India, right, then you have to mention it. Then production or operation overheads relating to resources received from or supplied to related parties. If there is any transaction from the related party, that means, for example, you have a factory, right? Your cousin have a factory. If you procure the material, right, any kind of or any kind of services you have taken from your cousin, right, who is there in your blood relation, that is a related party. Related party is any party that is known to you, right? Any subsidy, grant or received incentive, you have to mention that this is the subsidy that we have received. Credit or recoveries, you have to mention. Any abnormal cost, you have to mention, not forming the part of it. Any unabsorbed production, unabsorption, we have studied in the chapter of overhead costing that how to find out the underabsorption or overabsorption. Unabsorbed is in case of underabsorption, right? This will come in case of underabsorption. Right, guys? So this is cost accounting standard 3, that is related to production or operation overheads, and more or less the things we have covered in the overheads chapter also, right? So if you like it, do hit the like button, and most importantly, share with all your friends. And one very important thing, guys, paper number 8, cost accounting, all the module question are being covered in a series that is available on our Android and the iOS mobile app. The links are given in the video description. Do check it out, right? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.